Well, welcome everyone to the Monday edition of the Finance and Administration Committee. It is Monday, June 17th, and it is 9:30 a.m., so I am calling this meeting to order. As we gather this morning, we acknowledge on behalf of Council and our community that we are meeting on the traditional territory of the First Nations. We thank the Algonquin people and express our respect and support for their rich history. We are extremely grateful for their many and continued displays of friendship. We also thank all the generations of people who have taken care of this land for thousands of years. Connie, has roll call been taken?
Through you, Chair, yes, roll call has been taken and we have quorum.
Thank you very much. At this time, I'll ask, does anybody have any disclosure of pecuniary interest or the general nature thereof? I see none. Could I have an adoption of the minutes from our May 16th meeting? A mover and a seconder, please. Moved by the member from North Algona-Wilberforce, seconded by the member from Deep River. Were there any errors or omissions in those minutes? I will call the question. All in favor? And those pass. And at this time, I'll ask for an adoption of the closed minutes from March 7th, 2024. I'll ask for a mover and seconder. If there is discussion, we have to take these minutes into closed later on, but I'll ask for a mover and seconder, please. Moved by the member from North Algona-Wilberforce, seconded by the warden. Yeah, thank you. Any errors or, I guess I can't even call that. I can? This is all new. All right, were there any errors or omissions? I see none. All in favor? Thank you. And at this time, I will turn it over to Daniel to introduce our delegation, please.
Thank you, Madam Chair, and good morning to committee. We're very pleased to be joined this morning by Ms. Lori Huber of KPMG, the Kingston office, who is your audit partner. And we're going to walk through your financial statement and your audit findings report, which begin on page 43 of your package, or section 9 if you're on the digital version. And if I could start it off, I think I'll walk through the consolidated statement for a couple items and then turn it over to Lori to talk about her audit findings report. Just to begin with, though, I'd like to really express my gratitude to Lori and her team for all the really hard work that they put into these statements, as well as my own finance department staff. There's a lot of hours and a lot of detailed work that go into this. So thank you to both KPMG and my own staff. If I can begin on page 49 of your package, which is your consolidated statement of financial position, or your balance sheet of the municipality, if you will. I'd just like to draw your attention to the liability line called asset retirement obligation, which is in the liability section about halfway down the page, $17 million. That's the new item this year required under the new public sector accounting standard, that we take an estimate of what we expect to pay to discharge our legal obligation for certain contaminated sites. In the county of Renfrew, this is specific to about 180 buildings or 740,000 square feet of asbestos-impacted buildings. The vast bulk of that would be inside the Renfrew County Housing portfolio. So staff have given it their best estimate, and we have consulted with our peers as well as KPMG, and this is the number we've come up with that would take in today's dollars to discharge that liability. The other item I'd just like to note is the, moving down a little further on the page, the work in progress line item. $102 million of work in progress. About $50 million of that relates to Algonquin Trail, which is still entirely in work in progress as we await the final pieces of that purchase. About $45 million is related to Public Works linear asset construction that carries over year to year, and the remaining $6 or $7 million would be in other items at year end. Switching pages to your statement of operations, or your income statement, just to give you an idea of the sort of the overall position of the County of Renfrew. We're about $180 million a year organization. roughly 100 million or 95 million of that comes from government transfers and $55 million in property taxes. So we're much more dependent on senior level of government transfers than we are in property taxes. And if you look down through your expenses, just to give you, you wouldn't be terribly familiar with these breakouts of, general government protection services. Those are things we don't normally talk about. But general government would be your county council, your finance and admin, your HR, your IT, your real property departments. Protection services would be exclusively POA. Transportation services would be public works. Health services would be paramedic service, health unit, and the Ontario Health Team. And then social and family services would be Ontario Works Childcare and long-term care. That's why it's so big. It includes the long-term care. Social housing would, of course, be RCHC as well as those nonprofit providers we support. Recreation and cultural services would be the trails and in the 2023 year, the Ontario Winter Games. And then planning and development would be planning, economic development, and forestry. So that's those groupings that match your FIR return. And of course, this would show a $22 million annual surplus for the year. So that's our $22 million in public sector accounting standards surplus. And you ask, well, how does that relate to the items we talked about in April or March when we were talking about the municipal side surplus? And the answer is nothing has changed. So if we jump ahead to note, I believe it's note 13, we'll walk through how this ties back to the municipal surplus. So we, in common with all municipalities, do not budget for amortization, though we do report amortization on our public sector accounting standard statements. We do budget for the entire capital purchase in the year it's purchased, so that's why we're adding back our capital purchases. We would budget for the expense of paying the principal portion of our debt, and we would count as revenue the proceeds from that debt, as well as our ins and outs from reserves. And that's how we get to this $8 million allocation of operating surplus into reserves. And that's the exact number that we would have talked about in March or April, being about $2.2 million in surplus off the general fund, mostly due to property tax supplements and omits. Miramichi Lodge having a $2.1 million surplus, Bonnechere Manor a $3.2 million surplus, most of that due to provincial revenue and the changes there occurring inside long-term care with provincial revenue, and then RCHC a $680,000 surplus. And then the other note that I find interesting or useful is 11, being the statement of your reserves, just to let you know exactly what you've got in which reserve accounts throughout the year. And you'll see that it's, in the capital side, it's declining. Your reserve balances are down slightly from the year before, and that's per our budget, right? We had planned to have a massive draw on our reserves as we do all that capital work. That's expected. It's less of a draw than we had budgeted for because it was such a good year, right? That $8 million surplus is all back into your capital reserves. And with that, that's all the comments I had on the consolidated statements. So maybe I'll turn it over to Lori for her comments on that, as well as her audit findings report.
Welcome, Lori.
Good morning. Thank you very much. Thank you, Madam Chair. Good morning, everyone. It's my real pleasure to be here as well to share with you the highlights of our audit for the fiscal year ended December 31, 2023. I fully recognize our report was pre-circulated. And if you've had an opportunity to read through, as Daniel has clearly articulated, the audit went quite well again this year, and certainly nothing significant to bring to your attention, but I'll certainly walk you through some of the things that were contemplated as we worked our way through the audit. So maybe we'll start on page number 5 of our report, which should say status at the top of the page. So recognizing today we are sharing with the committee the details of our audit findings, recognizing that the financial statements will ultimately go to council for their final approval. That will then form the audit report date, which is slated for next week. So we are in this intervening period where the audit window still stays open. So to the extent there might be any additional subsequent events that we should be kept ourselves apprised with, we will certainly have the conversations with management to make sure prior to final release of the financial statements that they do incorporate all of the events and activities that could impact 2023 up to and including that date. So moving into the next couple of slides, recognizing we don't formally come to you with an audit plan, but it's an important concept to share with you as it really sort of sets the table, if you will, in terms of the size and scale and scope of our audit. So materiality is a concept from an audit perspective to say, what would change a user's decision on the financial statements from either a quantitative or a qualitative perspective? It is very much referenced in our audit report that we'll see in a minute. If we go to the next slide, I've given you some benchmarks to share with you where we landed. And the benchmarks for an organization such as yourself tends to be either total revenues or total expenses. We tend to actually rely on expenses because they tend to be less variable, because as Daniel has shared with you, the interesting piece in municipal revenue is to the extent you have one-time capital funds, that actually goes straight to revenue. And so that can be variable each and every year, depending on the volume of capital projects that might be ongoing in a particular year. So the benchmark can go anywhere between 0.5% up to 3%. So you can see there, we tend to hover around the 3% mark, which is common for municipal organizations, recognizing this is the second year for us to be engaged as your external auditor. We've actually kept materiality whole, consistent with the previous year, which is where you see the $3 million. So to the extent we would find anything significant, we would suggest that it would be material and change a user's decision on the financial statements if it started to creep up closer to that $3 million amount. The important piece to this group is to the extent we identify any differences in excess of $150,000, that's our threshold to have conversations with Daniel and his team to certainly identify if there are going to be adjustments in the financial statement or not. And we'll see that highlighted in a few subsequent slides. So moving on to the next one, just as a reminder to the group as well, and certainly not shared with you at the planning, but certainly upon completion, our audit methodology continues to be very much a risk-based audit approach, meaning we stand back looking at the financial statements as a whole, trying to identify where we believe there's a greater risk of material misstatement occurring, and certainly adopting an audit approach to mitigate those risks to an acceptably low level. The important piece to share with you on this screen, it's not a fulsome list in terms of all of the captions you'll see on your financial statements, either your balance sheet or your income statement, but a couple of things just to share with you more broadly. So at the top of the page, there are certain mandated risks that are provided to us by the profession outside of your organization, outside of our own firm methodology. The professional standards say you must presume a risk of fraud related to management's override of controls. Nothing unique to your organization. Anytime you have a presumed risk of fraud, it's automatically significant. So when it's significant, we obviously need to do some work to make sure that there's nothing that should be identified through the course of the audit. The other piece as you work your way through this table is we have set this year, in year one of the adoption of a fairly pervasive, significant new accounting standard, which tends to be unusual, being asset retirement obligations. You saw it on your balance sheet. It's sitting there at about 17 million. So certainly material from a quantitative perspective. And in year one, we needed to make sure all of the parts were complete and were accurate. And so we've made a in-year risk assessment as significant, and you'll see that on some of the subsequent slides. All of the other pieces are sitting at base, which is where we would have seen in the previous year. Moving along on page number 9 of our report, it gives you a little bit more detail in terms of that presumed risk of fraud that I just mentioned. But really, I think the piece to share with you today, we've done the work that's required to respond to that risk. And in terms of findings, there's nothing significant to bring to your attention. Moving into the next one, which is the asset retirement obligation. Again, I think Daniel did a great job sharing with you what that piece is. And I've given you lots of detail in terms of our response to that risk. But ultimately, the team did a great job collating all of the information to ensure that the standard was adopted both accurately and completely. It is an estimate in the financial statements based on the information available at that time. It will be required to be revalued at future period end dates, so in a year from now. and we're looking at December 31, 2024, it will have to be revised, likely, whether there are any inflationary measures or any impacts through the course of the year in terms of any remediation. So it will be an ongoing piece that will form part of your financial statements moving forward. And I would say commonly across the sector, we are seeing the numbers to be fairly large and material for housing corporations, and that's essentially the biggest driver for your financial statements as you consolidate the housing corporation into your financial statements. Moving along on page number 12, it should say control deficiencies at the top. As a reminder to the group, as part of a financial statement audit, we are required to gain an understanding of all of the systems, processes, and controls that culminate into the financial reporting process. So we've done that again this year, sitting down with the team, understanding what is new and different, and making sure that the controls appear to be designed and operating effectively. To the extent we might identify any significant deficiencies in internal controls, we actually are formally required to share that finding with you. Pleased to report here today that you'll see at the bottom of the page, we've certainly not identified any significant deficiencies to bring to your attention. The next slide shares with you other pieces that are new this year. 2023, I would say from an accounting perspective, was a little bit of a heavy lift compared to previous years. The first one being asset retirement obligations that we touched upon. If you've had the opportunity to read through the financial statements, you will see there is other actions that were required this year related to the financial instrument suite of standards. At the back of the financial statements, you will also see new financial risk disclosures, which are part of this new suite of financial instruments. So a lot of change this year, but really the story to share with you today, certainly comfortable with the numbers and also the adoption of the disclosures and the financial statements, and certainly set ourselves up in year one for future success as we move forward in the subsequent years. And fortunately, as we look forward to 2024, there are no new significant new standards that will be required to be adopted. So this was enough in 2023. Moving along on page number 15, at the top of the page, it should say specific topics. This is a good reminder for us to share with you, being those charged with governance, the types of matters or items that we should be having conversations with yourselves around to the extent they might exist. So you can see in terms of the findings, none of these items did exist, so there's certainly no significant matters to report, but should there have been, this would have been the forum to raise those with you. The next page is a reminder with respect to our independence. So in order for us to be engaged as your external auditor, we need to be mindful of our independence, because that's really the value that we bring to the table as that extra set of eyes from the outside. So to the extent we might provide any non-audit services to the corporation through the course of the year, we can. We just need to make sure that it doesn't encroach on our independence and we put ourselves in the part of management. Pleased to report today, we've actually not provided any such non-audit services, so there's nothing there that might be thought to get us into any issues with respect to our independence. The final piece, just to bring to your attention, is Appendix 1A. At the top, it should say Draft Auditor's Report, and this is really the culmination of all of our hard work from an audit perspective. And this is our independent auditor's report. It is a clean audit opinion based on the audit findings. You would have seen at the start of the deck, in terms of the numbers themselves, the quality of the books and records continue to be, I would say, exceptionally high. As Daniel had said in his remarks, the numbers have not changed since March. So what that means is the auditors came in and did not identify any changes to your income statement. So that's certainly a big accomplishment. And again, sincere thanks for all of the hard work and the cooperation of the team to make that happen. What you will see that is new and different in our draft auditor's report this year is at the bottom of the page there, you'll see the emphasis of matter comparative information. That's specifically related to the adoption of the asset retirement obligation standard this year. It was actually applied retroactively. So if you were to look at the 2022 financial statements last year, the comparative year in 2022 is actually different from the previous year's financial statements because of the change related to that new accounting standard. So this is in there to alert a user as to the why they are different. The next paragraph as well on the top of the next page is another matter that also says, as part of our 2023 financial statement audit, we have also audited the adjustments that impacted the previous year. And in our opinion, we believe they were appropriately made as well. Other than that, the body and content of the audit report has not changed year over year. It clearly outlines the responsibilities of management, recognizing the financial statements are a product of management, along with your own being those charged with governance and your responsibilities related to the financial statements. So that really concludes the highlights of the pieces that I wanted to bring to your attention this morning, Madam Chair, and perhaps I'll pass it back to you and welcome any questions from the group.
Thank you so much, but congratulations, Daniel and your team. That's quite high praise from Lori. All right, I will open it up. Questions, comments, concerns? Member from North Algona Wilberforce, please.
Thank you, Madam Chair, and maybe through you to Lori. On page 8, under the risk management, one of the significant risks is the management controls. Is that something that's reviewed as a significant risk every year, or do we need to look at additional controls?
Through you, Madam Chair, that's a great question, and it's confusing all the time. So that is one of the presumed risks mandated to us by the profession, and it should be baked into every single financial statement audit in Canada. And so what I mean by that, there's nothing unique with respect to your organization that would cause that to be significant. That is a presumed piece across the sector. So there's nothing uniquely different with respect to your organization. That would have come through our own judgment related to any control deficiencies that we might have identified. So I think the short answer is no, there's nothing that needs to be done with respect to that specific item.
Thank you. Anything further? Member from Amherst Bromley.
Thank you very much, Madam Chair, and thank you through you to both Mr. Burke and Ms. Ubers on the presentation. Picking up on Councillor Brose's comment, and I'm not sure this is significant risk. It's page 87 of 199, the slide significant risks and results. So, of course, as Ms. Hubers has said, there is an inherent risk to this entity or any other corporate entities on the perpetration of fraud. So on this page, with respect to our response, as this presumed risk of material misstatement due to fraud is not rebuttable, I'm not sure what not rebuttable is, but if I'm reading this correctly, part of the design of the audit is with a view towards examining whether there is any evidence of same. Is that correct?
That's correct. So through you, Madam Chair, there are actually 2 mandated fraud risks presumed by the profession. One is the one we see on the page here related to management override of controls. The second one is a presumed risk related to revenue recognition. That one, we are allowed, the second one, that is not included in your package, and I'll tell you why, and you've picked up on it, very detailed, which is great. So the presumed risk of fraud related to revenue recognition is allowed to be rebuttable. So what that means is for an organization like yourselves, that's a public sector organization, I dare say we would sit in a room and likely say that the presumed risk of fraud related to revenue recognition is significantly different in a public company versus a public sector entity. So what that means is we are allowed to not do any incremental work related to that fraud risk for revenue recognition because we do a lot of audit procedures already on revenue recognition in any public sector financial statement. What we can't rebut out of is the one you see on the slide related to management override of controls. So what we do is we understand the financial reporting process, making sure that there are design and implementation of controls around the journal entry process. So meaning, there's a preparer, there's a reviewer, there's a timeliness, it's completed. We identify any areas that we believe might be higher risk and spend time looking through the general journal for the whole year, any of those non-routine entries that culminate into the financial reporting process to make sure that they are adequately supported, they are complete, and again, they have those segregation of duties. So that's a little bit more detail on the work that we do and why we have that language relative to, in theory, the 2 presumed risks of fraud that do exist out there.
Supplementary.
Yeah, and following up on that particular question, so presumably, I don't know if this happens with the chair, with the warden. I know within my township, I had a direct conversation with the lead auditor for Admaster and Brumley, and there were several questions. I'm assuming that this is almost a template of the questions. One of which, though, was, do I have concerns or am I aware of any potential misstatement or something to that effect? So presumably that occurs for the county of Renfrew as well. And the reason I'm asking this is because ultimately, particularly as elected, we are not as hands-on as the Board of Governance as we are in the management of the operation. So I have to be deferential to the auditor that is not doing the audit with a view towards uncovering any sort of malfeasance, but in the course of the audit, part of the design of the audit is to go through certain items that may be indicators. Is that accurate?
Through you, Madam Chair, our audit approach is fairly similar. So as part of our planning and our risk assessments early on in the audit, we have inquiries, which are a number of standard type questions to hopefully lead discussions in terms of any particular areas of risk or any areas of concern, both with management and both with the chair as well. So those are completed annually as part of our audit as well. And then those items really marry up to some of the conversations that we see as we look through all of the minutes of meetings as well through the course of the year, both closed and open.
Member from Edmundston Bromley.
Thank you. And again, my starting point was this, was the page on audit highlights, which is page 82 of the report. And just one other question as it pertains to this, corrected misstatements, which is on the right-hand side, second from the bottom. We have identified an adjustment which was corrected through the course of the audit. And then it says, see Appendix 1B, Management Representation Letter. And 1B seems to direct me then to Attachment 2, and I went to Attachment 2, and I can't find it there either. So it seems that I've done a loop. Perhaps I have not seen it correctly, but I was trying to identify what was the corrected misstatements. I wonder if you could draw attention to that. Oh, is that it?
Sure. Through you, Madam Chair, this would actually be the table at the very back of Appendix 1B, which is the Management Representation Letter. So I can speak to that very briefly. So interestingly enough, as the accounts were accumulated as part of the audit, essentially there were debits and credits commingled. And so this entry was corrected by management. It's balance sheet only. So again, no impact on the right-hand side, which would be your annual reported surplus and deficit, to gross back up accounts receivable, which is what you'll see on the face of the financial statements, and then accounts payable and accrued liabilities of that $3.2 million.
Thank you for that. And further, Mr. Bromley, please.
Thank you very much. And yes, thank you, Ms. Hubers. I must have skipped right over that particular page. Actually, as I'm scrolling to try and find my notes, just FYI for the final version that is going to be presented to County on Note 8, which can be found on page 67. This is the actual financial statements. You'll note that it makes reference within the body of Note 8 to sick leave benefits being Note 7A and WSIB 7B, when in fact it is 8A and 8B. That's simply a clerical. And do forgive
Good catch. We will fix that. Thank you.
Thank you. I am still scrolling. I got to get to the actual statements rather than the notes. Bear with me. Okay, so on the consolidated statement of financial position, and I was trying to take notes as Mr. Burke was making this presentation. So generally speaking, throughout this document, though not exclusively, I will admit that, the restatement of 2022 is with regards to the ARO, or asset retirement obligation. So on financial liabilities, on page 49, it is $17.25 million, essentially. So of that, because I don't think the ARO is exclusive to the presence of asbestos, that often seems to be where we devolve the discussion to. Of that $17.25 million, what portion of that, this is probably for Mr. Burke, what portion of that would be specific to asbestos abatement?
Through you, Madam Chair, all of that would be asbestos. So we did consider a number of other similar items, such as lead-painted structures, abandoned wells, all the usual culprits. However, they were either immaterial or trivial, or did not meet the standard prescribed. So not that we don't have other things that we would have to fix, they just simply don't meet that standard. So the $17 million exclusively relates to asbestos and almost entirely, though not fully, related to the housing portfolio.
Supplementary.
Thank you. So I did, as quickly as I could, transcribe, not much of a stenographer, you see. I did note that Mr. Burke had mentioned this is specific to or identified in 180 buildings. Primarily, if not exclusively, this is within the inventory of community housing. Just the quick math takes this almost to $100,000. I think it's like $95,000 per unit if it was done on a unit basis. Is that approximate how the analysis was completed?
Through you, Chair. So the analysis was actually completed by unit. So depending on the actual buildings in question, they might have very different liabilities. Some of our buildings have been almost entirely remediated, such as the larger apartment ones, and some of them have had almost no remediation. So it was done specifically by address functionally. Quite a bit of work behind that.
And further.
Thank you. And no, that is not in furtherance of that particular question. This is on the consolidated statement of operations on the next page. And as I had indicated, the restatement largely is due to ARO, asset retirement obligation. But on this page, I wonder if you could comment. It seems that the only restatement I'm seeing is on the social housing line, but it doesn't seem to be related to the ARO, because in this instance it's just slightly under 300,000 is the restatement from 2022. In 2022, that line was stated, the audited statements in 2022 was 15,180,000, and now it's 15,472,000. So I'm wondering what that particular, is that in relation to the misstatements that I had asked about earlier?
Through you, Madam Chair, no, that would be specific to the asset retirement obligation. To the extent that the building, the underlying building that's impacted by that obligation has useful life left, we are amortizing that obligation over its useful life. So that adjustment would be inside the amortization of the Renfrew County housing portfolio. I don't know if Lori wants to add anything else to that one, but.
Yeah, maybe. I think you've said it well. Daniel, through you, Madam Chair, essentially, if you take yourself to note number 2 of the financial statements, there are 3 tables there on page number 14 of the financial statements that will walk you through. The first column will be what was in the 2022 financial statements. The adjustments are what are the impacts to the 2022 numbers in 2023, and then the restated to get you back. So I believe the number that you were referencing is the 291,975, which is additional amortization recorded in 2022 now, because at the top you will see there was a portion of that liability that actually went to your balance sheet being tangible capital assets, which is the 1.9.
Excellent. Thank you for that. Mr. Bromley, please.
Yeah, and once again, bear with me as I furiously scroll. I'm looking for the segmented information. I cannot recall which note that was. 14, perhaps? It is 14, and that's on page 73. So, and I know that this has been so for eternity, essentially. I've always been challenged with this, but so notwithstanding that both long-term care and the paramedic service, and by extension, I suppose, somewhat the health unit, falls within the purview of the health committee. With respect to our FIR and with respect to our segmented information, long-term care does not fall within health. In fact, I'm hoping that it is still a requirement almost of the reporting, because homes for the aged is a fairly antiquated term. I would be very happy to make it an obsolete term as we have moved to long-term care. But I'm wondering what component of the segmented information, and the charting, I think is, on the next page, what component of social and family services is actually long-term care?
If you just, through you, Chair, I just need 2 minutes to break that out.
Mr. Burke will be much more prepared when I ask these questions, as once again, a week Wednesday.
It's a dry run, yeah, as long as you ask the exact same questions.
Oh, there will always be a little bit of a twist, I think, Madam Chair.
Poor Daniel.
So the homes for the aged line, as it relates to our FIR, would have expenses of $40 million. So of that, that 73 there in the expense column, 40 would relate to the long-term care homes.
Okay, thank you. And I do have just a final question, and this one again will be specific to Mr. Burke rather than Ms. Hubers. And I'm now looking for the debt. Sorry, not debt, the investments. Here it is. It is item number 5. It's on page 64. So I had intended and just did not have sufficient time, but I note the bottom line, kind of the value that is invested. And this was, I think I broached this at the budget deliberations in January as well. I do note that we have an investment policy, and again, I had intended to consult that, but did not have sufficient time for that as well. This is pretty static, and what I had suggested at budget is, and we have now seen that the Bank of Canada, a week ago, within the last 10 days, has made now the first reduction in the so-called overnight lending rate by 25 basis points. I think that by and large, I concur with the punditry that is suggesting barring any risk or shock in the global economy or to the Canadian economy, it's probably safe to assume reasonably that there will be at least 2 more, potentially 3. So I am wondering, I note that we rolled over a 3.51% BMO GIC into a 5.45% BMO GIC that is going to endure through to 2028. Certainly in my math, 5.45 is much better than 3.51. But I also note that the bottom line is we're not seeing a different change. And I'm inclined to think that if I went back to the last 4 or 5 audited financial statements, I'm probably going to see that number fairly similar. So I don't know if the County of Renfrew by policy has capped our assessments, if we have them as a percentage of total holdings, i.e. Reserves and general. But I think that the curve that we're seeing, the inflationary curve, the interest rate curve, et cetera, it seems that it is descending almost at the same pace that it was ascending, though it seems to have frozen at around 3 rather than getting right down to 2. However, my inclination here, certainly in my private business, is to watch these things very carefully, whether I am borrowing money or I have money on investment. And it would seem to me that this might be opportunity, even that 5.45%, if that had been, I think it's at that rate, it's generating $54,000 of interest per year. If it was double that, it would be $100,000 per year. 5.45 is pretty significant valuation in terms of offsetting levy requirements. So I'm wondering what the County of Renfrew has perhaps as guidance, if the investment policy doesn't say it, as what funds we feel safe with on having on investment. These are essentially blue chip investments, but of course they do remove these funds from utilization in any given year until they mature.
Yeah, through you, Madam Chair. Yeah, that's an excellent question. So the first comment I would make is that while 5.45% is a good interest rate, we are not earning interest on money not invested. Our regular operating account does have actually a comparable or slightly better interest rate, but it's not long-term locked in. So we're not earning interest. What we are losing if we don't lock in now is the ability to lock in that higher interest rate under the assumption that the operating account will slowly decline in interest earned. To your question about how it's relatively static, yes, that's been our aim, is we have left it static. We struggle to, as you mentioned, know what we should invest for when. Our guiding document would be our long-term financial plan, which would suggest that we should have almost nothing in investments beyond 3 years out. That has not been the case in practice, as we've not seen what we had planned on in terms of our cash flow. So we do struggle to kind of gauge what is the correct level of investments. And barring, a real definitive good idea of what we will need, we have simply left them static and reinvested as they come due. So it's roughly, $70 million in cash and 10 or 8 in investments is our ratio that we've held to, for better or worse.
And I could see that it would be a balancing act to say we need the cash flow, so you don't necessarily want stuff locked in. But on the other hand, when an interest rate is good, go ahead.
Thank you, Madam Chair. I'm thinking that our delta of funds available is rarely remotely threatened from a cash flow perspective. I do note that there are 4 installments of tax levy come to the county, notwithstanding that my municipality only collects the taxes twice a year. In any event, I have found theory is good in theory, but rarely in practice. The challenge for me, or the approach that I take, certainly when I am wearing my other hat, is almost from the same perspective, but the mirror image of my mortgage, i.e., that floating rate is really good, but things are looking tough, and when do I want to lock in? So I recognize that we have a very favorable interest rate just on deposits through the RAG, the Renfrew Area Administrators Group. The challenge for me, though, is that I think that, as certain as one can be, this is pretty substantial certainty that we're on the decline. If we look at this in the reverse image that we do with a mortgage, absolutely we are earning substantial investments with no restrictions on access to any of our funds that are held on the RAG. But I'm fairly certain by 2025, 2026, and 2027, and 2028, it's probably not going to be remotely near to 5.45%. So I don't know what the number is, but I think that my recommendation is, July is the doldrums as far as the County of Renfrew, but perhaps end of Q3, early Q4, there could be some kind of a report coming forward with some options or recommendations, because right now I think that this is the reverse of the mortgage, that we are seeing interest rates earned on the decline, and I think we are at that point where the two curves are crossing right now, where we may want to be somewhat more aggressive, though of course still being guaranteed investments and with a view towards cash flow. But I think that we have opportunity here to earn income off of the holdings and give some consideration to the ratepayers of the County of Renfrew.
Laurie, was your hand up? Did you want to weigh in? You were just waving at me?
Not really. I'm good, Madam Chair. Thank
Okay.
you. Nothing further to add.
All right, so food for thought to bring back an investment policy later in the year. I am actually losing my voice. Warden, you may have to take over here. All right, is there anything further? I see none. So thank you, Lori. I do have a recommendation that the Finance and Administration Committee recommends to County Council that the draft audited statements for the County of Renfrew for the year ended December 31st, 2023 be approved. May I have a mover and seconder, please? Moved by the member from Deep River, seconded by the member from North Algona-Wilberforce. All in favor? And those will be forwarded to County Council. Lori, we'll see you next week. Thank you.
No problem. My pleasure. Take care.
You
Bye
too.
for now.
And nice thinking on your feet there, Daniel. All right, we are going to move back to Mr. Kelly and the admin report, please.
Thank you, Chair, and good morning, one and all. My report is starting on a number of different page numbers, so I'm not even going to mention it, but my report is available for you in largely a number of information items. Information item number one is the CAO's quarterly report. It has been another interesting quarter, of course, with several items that have already been reported or continue to be reported to Committee and Council, including efforts to bring forward the long-term financial plan along with Mr. Burke and other members of the SLT. We're beginning some work on central scheduling. Of course, Daniel's going to speak to that as well. A lot of the work in the first quarter was around a number of different summits that were led by different departments, including the Housing Summit, the Mesa Gathering, and well, those took up a lot of time. There's been several initiatives that we've spoken to already in different departments about transitional and supportive housing that we continue to move forward on. Of course, and we'll speak to this later in the report, and we have spoken to it at County Council last month, was Queen's Park Day earlier in June. Or is it May? Anyway, earlier this year in May, whenever we did it, it seems. Gosh, the year's going by. So that was that. And of course, the recruitment efforts we've spoken to, and then just items of interest, the golf tournament, which will be spoken about later, and other evenings and days where I've been asked to attend and speak on. And as I've noted in my last report, the EOWC, of course, takes up a bit of my time as Secretary-Treasurer, and there's been several meetings, including even one later today, on moving forward on the regional housing plan and morphing that to fit some of the federal and provincial initiatives moving forward. So that continues, as does work with the OHT. Madam Chair, item number 2 is on Queen's Park Day. Although it was spoken to last month at County Council, we have included the items of advocacy, the sheets that we left behind, if you will, have been included as your appendix. Item number 3, and I apologize, in our edits on Thursday and Friday, I did omit one item, or one that has been submitted, so it's just omitted off of here, but not omitted to the MO group, is the Ministry of Education to talk about childcare spaces and the lack thereof in Renfrew County. So following is the list of delegations that have been requested. Of course, we won't hear for several weeks, and when we do, we'll suss out more details. There is a large amount of detail to all of these delegation requests. We did not include it in here just for space, but this is the opening paragraph that we submitted to them. Again, there are several paragraphs in terms of backup to help the AMO staff and ministry staff make their decisions as we move forward. Item number 4, committee, is a new initiative that we're proposing to bring forward, and provided there are no objections, we will continue to do so. We have often met, the warden and myself and members of the senior leadership team, and even going back to then Warden Murphy, then Warden Robinson, and even Warden Sweet, and many others, have gone out on a road tour, if you will, with 2 other municipalities to talk about county services and how we can best work together. It takes a significant amount of effort and time to do that, and often takes months because of different meeting schedules and whatnot. So we have determined that one of the best ways to move this forward would be copying, quite honestly, from what happens in Hastings and Peterborough, and have a Renfrew County Day here. So we're anticipating, and I've reached out to my colleagues at all the municipalities that make up the Renfrew County, and have determined that a Thursday in September, late September, works the best for most. And we would invite councils and staff members from those municipalities, all the municipalities, to 2 different sessions, one later in the afternoon and then one that evening. Talking to members of this committee, it is felt that many councils have council members that work. So an evening session would work as well. So it would be a day of 2 sessions of here's what we do, a bit of a show and tell for the County of Renfrew, and then a bit of a collaborative conversation with all the municipalities on what we can do to work together. So that is being planned for September the 26th. Here at our white and red pine rooms downstairs, unless there are objections, and we can talk about that when we get back to this information item. Items number 5, 6, and 7 are all reports coming forward from the Health Committee. Item number 5 is a staffing report for additional resident care coordinator. Item number 5 is a staff report for a position of an additional resident care coordinator at each of our 2 long-term care homes, and all the information is there, and Mr. Blackmore is here to speak to it should you wish more information. But the Health Committee was in support of these new positions to help assist our residents in those 2 homes. Item number 6 is a redistribution of hours for personal support workers, so it's a reduction of full-time, part-time positions in PSWs, and then redistributed those hours amongst those workers at Bonisher Manor. And item number 7 is a staffing report for 14 full-time PSWs at Miramichi Lodge. So it's a bit of a shuffle in order to provide our 4 hours of long-term care. And again, Mr. Blackmore is here to discuss individual questions or concerns. Madam Chair, that is my report.
Thank you. All right, we will go back to information item number 1, the CAO's quarterly report. Member from Edmundston Bromley, please.
Thank you, Madam Chair. Through you to Ms. Kelly, within finance, the 3rd bullet point, is that with respect to HR? Is this kind of the timekeeping, if you will? Is that what central scheduling refers to?
Madam Chair, and yes and no. It's being led by finance. Of course, HR is deeply embedded in this one as well. It's a coming together of all that. We have a number of different systems throughout the corporation, union, non-union, and otherwise. It's a mishmash of different systems, including paper, including digital.
A Tower of Babel, perhaps.
Correct. Mr. Burke is leading this, and you can speak to it now. I think it's also, is it in your report today? It's not in your report. I'll ask Mr. Burke to speak to what his goal is and the intent of getting this completed is.
Yeah, thank you, CAO. And yeah, so these would be the systems that feed into our payroll system, but they also, in a number of areas, provide the schedule, and where there's unions, the backfilling and the sick time, shift overtime, things like that. So I think we have 2 systems running 3 or 4 different instances, plus a couple non-union paper-based systems running, maybe 6 or 7 in total across the corporation that feed into a biweekly payroll. So our goal would be to have one system feed into one payroll. And as well, we look to our peers and see a number of innovations like texting for shift fill and things of that nature that we don't have the capability to do currently. And we would look to get there, I suppose would be the correct word, to offer those type of services to our staff, like vacation booking online and things like that.
Streamlining, as it were. Yes, member from Edmundston Bromley.
Thank you, Madam Chair, and thank you through you both to Mr. Burke and Mr. Kelly. Is this, so we did, and I think that we attached to the provision because it was recently, perhaps May, if not only as far back as April, and I can't remember what the amount, it was a small amount, but it was only kind of to till the soil, if you will. It was only the starting point, maybe $45,000 or something to that effect. And is that consistent with this bullet point as well? Is that starting the process?
Through you, Madam Chair, yes, that is correct. So we have reached out to several IT consultants who do this, who would help. as well as internally. We've met at least once to try and get a handle on what we're doing now, which wasn't all that clear. And we've also reached out to a couple of our peers to see what they're doing as well. So the system is in process. We're working our way through it with an aim to bring a business case into the 2025 budget would be our goal.
Thank you. And just finally then, so that is just kind of priming the well, if you will, the expenditure this year. But it sounds, given the, again, Tower of Babel system that we've been employing heretofore, it sounds like there's opportunity perhaps to find some more efficiencies and savings, if you will. I'm assuming at the very least we can probably retire some of our abacus and mimeograph machines as we move into the 21st century. Is that relatively accurate, that we can find some efficiencies?
I think, through you, Madam Chair, certainly efficiencies, though at the outset our goal is not necessarily cost savings per se. I expect that, the new system will replace the old, but it may not be any cheaper. But I think between Greg and myself, if we can prevent at least one grievance, we will come out further ahead financially if we can get to that point.
I am always happy, even if cost savings are a byproduct. And I think that given the dystopian regime that we currently employ, I cannot conceive that we cannot help but save some funds. Thank you.
This was a huge discussion during the interviews for the Director of Corporate Services position, and I hadn't realized just how sort of dysfunctional all these different areas were, where people were booking and trying to find people to cover them off for shifts and et cetera. But I thought the biggest benefit would be to the poor person that has to do payroll, where it would all just feed into one system. So, if that makes that division happy, then I think it's a win. All right. Anything further on information item number 1? Information item number 2, Queens. Oh, sorry, Warden, go ahead.
Good morning. Thank you, Chair, through you to Mr. Burke. Will this system evolve to a fob system where someone just when they walk through the door, clock in, and in that way there's a means of assisting admin to say who's in the building or where they are, what work site they're at, if someone from the public or someone else is wanting to get a hold of them.
Through you, Madam Chair. So we do presently have, I think only EMS uses a punch clock type system. And I'm not certain if there's much appetite for it in the homes or in other places, but we could certainly look at that, and technology is always evolving. Like I know some of our peers have facial recognition software on cameras that clock you in and out, which is, a startling use of technology, but we're certainly going to look at our peers and see what the best practice seems to be.
Thank you, I think.
I know everybody kind of looked at each other going, no, we're good. We're good. Yep. All right. Number 2, Queen's Park Day. Yes, member from North Algonquin Wilberforce, please.
Thank you, Madam Chair. And just a comment, I really want to thank staff that were involved in putting all the information and papers together for the advocacy days, and also to Director Kelly for keeping everything organized and having invested a lot of his own time and energy to make this possible. And it was very enjoyable having more than just 10 minutes that we normally get at conferences to speak to some of the ministers. So really, really appreciated and enjoyed the day. Thank you.
Thank you for that. Anything further? Yes, Warden.
Yes, I agree with what my friend has said, and I'd like to add too that, we've accumulated some good information. So now it's we have a very polished approach where we have the roll-ups. We have lots of different handouts, and it can be passed on electronically, and we're able to even patch into their system. So there was information coming up on the boards or the screens on the walls as well. So I think it's a very good exercise for us. But I think we have to remember where we started some years ago, where we're handing out hastily mimeographed duotangs of information to now having a very professional looking document, well-written well-written, concise. There's numbers included in them. So the approach has been to professionalize what we're doing. And I know people think, that may sound phony or contrived, but you do need a certain amount of professionalism. So I think we should note the progress that we've made. And then also, as my friend has suggested, the staff put in a considerable amount of time to briefing us so that we were ready to go. And it was a brand new format, and credit to the ministers, and PAs. We asked them to show up prepared to have a conversation. They did. They didn't bring 3 or 4 or 10 staff to sit behind them. They brought one person to take notes. And it was a very free conversation where they would interrupt, not in an unpleasant way, to get clarification. And we could also interrupt them to provide clarification or to provide some background information. So it was a very good format. And I think, I'm hopeful that we'll continue to do that maybe twice a year on different topics to be a little more concise and bring in a little wider audience. But I think it was a very good first time with this model. And kudos to MPP Yakubuski. It was a bit of a risk for him to join in on this endeavor because it could have blown up and not worked well. But I know he was very satisfied with it, and he and his staff worked very hard to put it together.
Well, I do know with the Renfrew County Day, Craig has employed this reverse AMO again, bringing the local tiers here rather than going out. So I thought that was funny when I read it, sort of the same idea. I'm sorry, James, do you have something else?
Yeah, again, just to follow up, again, this was a Renfrew County first at Queen's Park, and at least 2 of the ministers liked the idea so much that they want to do it with their communities that they represent as well. So hats off to Renfrew County.
Yeah, no, it was a good way to do it. I'm glad it worked out. All right, number 3, AMO delegations. Good thing you didn't put the names of the ministers. It's intentional. Same with my Roma report last month. I did not put the names of the ministers just in case.
Chair, and I know there's no question there, but we've learned this in the past. It seems with this government more than others that about a month or 2 before AMO, they tend to do a flip of municipalities. So we have learned our lesson.
Yeah. I think the previous government, just before, like 2 weeks before AMO, I think Catherine McGarry all of a sudden was carrying binders that were bigger than her. Yeah. Did anybody have any questions, comments? All right. Number 4, the Renfrew County Municipal Day. Yes, Warden.
Again, I think it's a very necessary. It's a great thing to start this because it's necessary, I think, to impart information and opportunities to our partners. And the only way you can do that, I think, is face to face. And as Mr. Kelly suggested, it's almost impossible to fit all 17 municipalities into 1 year. You would be going to meetings steadily and still probably not get it done. So this makes a lot more sense. Everybody gets the same information at the same time, the same opportunities, and I think part of it is relationship building because as we've all predicted, the next several years are going to be interesting as municipalities try to either maximize revenues or cut costs by combining services or going to a joint service model. And I think to start, it has to be face-to-face conversations that build a bit of trust and also some knowledge about the possibilities. So this is a really good endeavor, and congratulations to staff.
It's also go ahead. Sorry, North Algonah Wilberforce.
Thank you, Madam Chair. And yeah, just to follow up on what the warden was saying, and I'm just curious, maybe more a question for staff. is there a possibility to do a little bit of a mock committee or county council meeting just to demonstrate for, I know it would be helpful for my council just to get an idea of how committee reports are presented, how the formality of county is transferred to some of our own municipalities, which I've been accused of being too formal. So I think it would be
You
helpful.
can't win.
Madam Chair, through you, we'll have a very short window. We can work out some ideas. We're still fleshing out this out. I mean, I would suggest to you that every meeting we do is on YouTube now, and they're more than welcome to spend 3 hours of their lives watching each one every day. But I mean, we could show them this room and show what we do, but we'll figure something out. I mean, we'll figure something out.
That was something I was going to ask you, like as opposed to doing it in the Pine Boardroom, or like why not do it in these chambers?
Well, Madam Chair, there are 115 elected officials and all their staff.
Pack them in.
We can certainly look at different ways. I mean, we would look at a bit of a tour of the room if we have time.
Okay.
And that was part of the plan as well.
Okay, so I like this idea, and I'm going to out myself. Former CAO Morrow and I were supposed to go to a particular municipality one evening, and surprise, we went to a different one. We had them mixed up. I know. But we both had it in our calendars as one municipality, but it was actually another. So, best laid plans of mice and men. All right. Number 5, the business case, and 6, and 7, and the report as a whole. And I will ask for a mover and second, please. And we're going to get you in the minutes here. Moved by the member from Laurentian Hills, seconded by the member from North Algona Wilberforce. All in favor? And that carries. We're going to take 5 minutes. Please. Welcome back, everyone. All right, Daniel, take it away.
Thank you, Madam Chair. The Corporate Services Finance Report begins as item 9. 9A, the resolution for the approval of the audited financial statements was passed earlier. Item B is a recommendation that the Finance and Administration Committee recommends that County Council approve the transfer of $200,000 from the Ontario Winter Games Reserve to the Working Capital Reserve.
Thank you. I'll ask for a mover and seconder to get it on the floor, please. Moved by the warden, seconded by the member from North Elgin-Wilberforce. And back over to you.
Thank you, Madam Chair. Committee will recall that when the Winter Games were originally approved, County Council had budgeted $200,000 as the seed money, so to say, for the games in case it was ever required, which it was not, and it's been hanging out in the Ontario Winter Games Reserve ever since then. So this is to return it to the County General Revenue Reserve, and does not have an impact on any of the previous announcements about the Winter Games surplus and such.
Excellent. Comments, questions, concerns? Go ahead, Warden.
Yes, I'll speak as chair of, or former chair of the Ontario Winter Games. Thank you very much to the county for providing that security blanket. That was instrumental in allowing us to confidently go forward and structure the games, start arranging contracts, and go forward with some initial spending, especially prior to the announcement of delaying for COVID. It was a tricky time trying to navigate spending a little bit of money, but not too much, and money that could on items that could be reused. So this allowed us that flexibility and strength, and especially with the performance agreement that we had to sign with the province. There were certain milestones. It was difficult to meet those milestones on occasion, given COVID and the uncertainty of it, and the uncertainty of whether it had passed or not. So this was instrumental in allowing us to move forward. So thank you very much. It's no longer needed, and it should be returned back to the County of Renfrew.
I didn't have this in my budget, though, to give it back. All right, if there's nothing further, all in favor. It barely paid for Jason's credit card. And on to bylaws, please.
Thank you, Madam Chair. Recommendation that the Finance and Administration Committee recommend that County Council approve the revised policy GA01, procurement of goods and services, and that a bylaw to amend bylaw 59-02, corporate policies, be adopted.
Thank you. I'll ask for a mover and seconder, please. Moved by the member from Deep River, seconded by the warden. A little bit of background.
Thank you, Madam Chair. So this was a substantial overhaul of our purchasing policy, somewhat precipitated by the delegated authority bylaw, which you would have seen in action last week during committee. And this is to harmonize those two elements together. Also, we took the opportunity to make numerous changes. The policy in itself dropped about 10 pages just from cleaning up other items, so it's quite a bit more condensed. Still being a 40-page policy, but quite a bit more condensed. But just to go over the highlights, if I could draw your attention to page 141, or Schedule A of the bylaw, which is kind of the handy reference chart. So if this is approved, then the directors or their designates would have the authority to purchase anything less than $10,000 outright. Previously, that was $5,000. And then the informal procurement or two verbal quotes would be anything less than $25,000. That was previously $15,000. And then when we move into the formal process, the request for quote, anything less than $75,000, previously $50,000. And then the RFT, which is tender or RFP, would be anything less than $150,000, could be approved by the CAO. That previously was $100,000. And then we get into these new items where if it's greater than $150,000 of procurement, but it is within an approved budget, it would be processed through the delegated authority and move right through almost instantly. If it is greater than $150,000 and $100,000 or less over budget, it could be approved by the standing committee, and then anything that's not budgeted or greater than $100,000 over budget would have to go to county council. And those are the big changes. Other than that, the other two items to really note are the inclusion of cooperative purchasing into the non-competitive purchase process. So where previously we would look at things like the canoe and other items and compare them alongside as an option under a tender, going forward we could take that as we're going to buy through a cooperative purchasing agency, and that would be the end of it. And likewise, I somewhat struggled with this one, but inserting a prohibition against alcohol and cannabis purchasing, which by convention we don't do, almost never, though the odd time we have. And this would be a blanket prohibition against that. So I'm not sure if that's a desirable thing, but taking our cue from the broader Public Sector Procurement Act, it is prohibited there as well.
And I think something that the elected especially are very cautious, and we know that when we go to a conference, etc., it's on us.
Though I should point out that inside the gift bags you took to give away to the ministers were local beers and things like that, and going forward that would be prohibited. So that's typically where we would buy alcohol, is not on expense claims at dinner, but as gifts or other items like that. So that's where I struggle with it, the inclusion of this, but again, I have left it in there.
Okay, but we didn't take any of the ministers' cannabis, right? Just to be clear. All right, so I'll open this up for comments, questions, concerns. Member from Aveston Bromley, please.
Thank you very much, Madam Chair. I remain unconvinced of the appropriateness of delegating, standing delegation of authority on making purchases. That vote was held at the May County Council meeting. At the time that on purchases that we routinely did this, those councillors that were here at the time may recall it had almost been a standing practice for July, wherein essentially all activities of county council are suspended for the month of July, and yet there was business that needed to be transacted. That was typical. And then I cannot recall which year that it began to creep, and the recommendation was to become both July and August. And at that time, I spoke vociferously as this year, that in fact that is an obligation. It's an abdication of our governance responsibilities, largely with the now delegated authority. The next step will probably be County Council can probably meet quarterly, because I'm not sure entirely what business we're going to be doing other than approving the budget. When the intent was to extend it into August, it did not carry. And it was based on that entire principle that Council is here in all months but July, and that it is rare, and occasionally there are special meetings held of committee or Council when there was pressing engagements. So I recognize that it was the vote, and I do not recall that it was not recorded at County Council at the end of May, but if all county councillors were present, I know that the vote was 17-1. And I am that one, and I am not convinced that it is still required. So just on principle, I will be voting against changing the procurement policy. And in fact, I question if we were changing the procurement policy before we were changing the delegation of authority, if it would have been 17-1. In any event, I'm just giving the reasons for that, Madam Chair, and I would seek a recorded vote.
As you wish. Is there anything further on this policy? Warden, please.
Yeah, thank you. Just curious about Schedule Schedule B, number 3. A bid bond must be executed, signed by both principal, contractor, and surety. To be valid, if either signature is missing, the response is automatic rejection. But then it goes on to allow for, if one or both corporate seals are missing, it's still considered to be valid. So I'm just wondering why that would occur when it would seem to me the seal is probably even more important than the signature.
Through you, Madam Chair, I didn't actually make any changes inside the irregularities section. I'm looking at Director Perkins, who would be the primary user of this type of requiring bid bonds and seals. And maybe if he could...
For those of you, for your viewing pleasure, Mr. Perkins was not ready to answer that question.
Automatic rejection if the seals are missing.
It's not critical, it's just something that caught my eye when I was going through, like I'm going to hang the document on that.
Yeah, if I can.
Yeah.
So over the years, we have reviewed this and had comments by our legal experts as well, who have reviewed this and made these changes. So they didn't flag this as an issue to be. I know it seems weird, but it wasn't flagged as an issue that we should amend over the. It's what it is.
Alrighty then. Yes, Warden.
And then Schedule C, when we get to 1.0 advertising, and it talks about in accordance with applicable trade agreements, is there any chance of adding an PSAB in there as well? Because I know they often issue bulletins about trade agreements, something about current PSAB bulletins or something along those lines. Because they change on not a yearly basis, but PSAB often changes something every year, and sometimes twice a year.
Yeah, no opposition. We can certainly add that.
Thank you.
All right. Anything further on this item? So, member from Aviston Bromley has asked for a recorded vote. Are we ready? Kind of? Oh, you are? Okay. Go ahead then.
Councillor Donahue?
Opposed?
Councillor Burrows?
Opposed.
Councillor Doncaster?
In favor?
Councillor Girardini?
In favor.
Councillor Murphy?
In favor?
Oh, sorry, Warden Emo. I'm
In favor.
sorry about that. The motion is four in favor, so it is carried.
Thank you. All right. And that's the end of your report. So could I get a mover and seconder for the report as a whole, please? I thought Lee was voting there. Warden? Seconded by the member from Laurentian Hills. All in favor? And that is carried. And now we will move on to human resources, please.
There's just one item for us.
Oh, sorry. Well, okay.
It's not on the side tab of it.
Okay, so, and this is very, I'm working off two different documents because I did have problems with Diligent until this morning. So, sorry, go ahead.
The same as you. So thank you, Madam Chair and to committee. Just one information item for us, and that's our regular workload statistics. And just a note that our intention moving forward is to bring this on a quarterly basis along with our, our courtroom statistics. And that's it for me.
Thank you. So apologies to you. I also have some information from our Roma meeting from AMO policy about some of the things they're doing with POA. So I will send that to you and it'll be in my report for next week. Unless the warden wants to write the report from the Roma board meeting. A girl could hope. Okay, anything on POA? Then I will ask for a report as the whole. Moved by the member from North Algona Wilberforce, seconded by the member from Laurentian Hills. Discussion. All in favor. And now we'll go to Human Resources.
Thank you, Chair, and through you to committee. Good morning. So information item number 1 on the Human Resources report is the 17th Annual Wardens Golf Tournament, which occurred last Friday, June 7th at the Dragonfly Golf Links in Renfrew. We're pleased to report that it was a successful day with approximately $5,000 being raised to support 2 charities, Autism Ontario East Region, as well as the Housing and Homelessness Fund within the county. I'd like to shout out a special thank you to the county staff, Amanda Kelly, Amanda Nesbitt, Andrea Patrick, Aspen Carroll, Bernadette Plummer, Brittany Nagora, Connie Wilson, Gwen Dombrowski, Kira Sully, Mackenzie Stewart, Tina Poplinski, and David Donner from our Public Works Sign Shop, who helped make the day a great success, despite the rainy weather. Information item number 2 is an update on our international recruitment efforts. During the month of May, the Bonnechere Manor was pleased to welcome an 8th international recruit to the team. The remaining 12 recruits are waiting on some paperwork to get processed through to allow entry to Canada, and we expect their arrival in the short future. Number 3 is sort of speaking to some successes of our co-op placements. So I'm going to say within the last couple of months, I brought forward that we hosted some co-op students here from the colleges, local colleges like Willis College and from the Pontiac Continuing Education Center, and they've actually blossomed into county employees. So started today, actually. Denise is starting in our corporate services department on a contract to cover a mat leave, and Emma with the community services department will be taking a contract till the end of the year. So this is a good success that our co-op opportunities are turning into county employees. Information item number 4, shared training opportunities. So I want to thank the town of Renfrew. Kevin Raditz from DNP and myself attended an AMCTO project and portfolio management training event held at the MyFM Center on May 27th. So some great information learned there that we can bring back to the county. Information item number 5 is our employee recognition for the first quarter of 2024. So attached as Appendix HR1 is the list of winners for this round. Congratulations to all the winners, and thank you to everyone that made nominations. The Q2 nomination deadline is June 30th, and applications can be made online through our website. I'll leave it at that.
That's lovely. Your report's always so light and fun. All right, so we'll go back to information item number 1, the golf tournament. Yes, Warden.
Yes, through you, Chair, I'd like to thank all of the county staff who worked hard on this and attended. We were greeted by smiling faces, helpful all day long, and it really sets a great tone for golfers as they show up and people just showing up to one of our functions. Again, very professional looking with lots of tools that say our name and our brand on it, and then we also had great work with pictures during the day, and any time people came through the main area, they were greeted by staff by name. So just a great setting, 2 very special causes, I think, to our community, and we had 120, I believe, golfers, and a number of sponsors. I can't remember the total number right now, slips my mind, but we're very grateful to them. To the golfers who endured rain, it was quite interesting. It looked like a caravan of people who were moving or homeless. They'd get under a tree, change into their rain gear, and then get out from under, then change back and put the rain gear on their golf bag and drive around in the sun, hoping it would dry out. So it was an interesting day, and of course, Dragonfly always treats us really well. And so again, thank you to everybody that worked really hard to make it a special day.
Excellent. Anything further? Number 2, the recruitment efforts. Number 3, co-op placements. That's really neat that you've got co-op students that have turned into employees. I think that's fantastic. Number 4, shared training. Oh, I'm sorry, member from Laurentian Hills.
Yes, thank you. I just want to echo that, Chair, that I think it's very important that we continue to offer these co-ops. And as we see, a lot of times they turn out to be successful candidates for hire. And and also for the golf tournament, it was the first one that I was able to attend, and it was very well run, very welcoming. And I know that the 3 men that I golfed with were quite impressed with it as well. Thank you.
Excellent. Thank you for that. Who won the golf tournament, by the way? Oh,
I can't remember.
I'm not allowed to ask that, apparently.
It felt like a bad dream.
Did he really? Oh.
Yes. Brad Sweet won, and he towed along, Brad Sweet and Peter Barnes won the tournament. They towed along 2 bobs.
Okay. I feel like I should have known the answer to that. And then I got this look from Craig like, why, Jen? Why? I had to ask, right? All right. Number 4, the shared training. And finally, number 5, the employee recognition. Congrats to the winners. This is awesome. All right. I will ask for a mover and seconder to adopt the HR report as a whole, please. Okay, again, I apologize, guys. I'm going to have to just stick to one. I know it is. Yeah, for those that are viewing, we're using new software, and it's
It's working really well. It just takes a little while to get used to it, is what we're trying to say, I think.
Yes, it is working very well. This is all user error. All right, and now on to bylaws. I found them. They're not in the PDF. They're only in Diligent. No, I'm blaming myself. I had problems until this morning. Go ahead.
Thank you, Chair. Through you to committee, the first recommendation is that Finance and Administration Committee recommend to County Council the approval of the following corporate policies. A, Policy A20, Use of County Vehicles, which is a new policy. B, Policy A21, Reference Release for current/former employees, another new policy. C, Policy A22, Co-op Student Placement Policy, another new one. D, Policy E06, Pregnancy Leave and Parental Leave, an amended policy. And E, Policy E11, Flexible Work Arrangements, an amended policy. And that a bylaw to amend Bylaw 63-03, being a bylaw to establish human resource corporate policies and procedures for the County of Renfrew, be adopted.
Thank you. I'll ask for a mover and seconder, please. Moved by the member from Laurentian Hills, second by the member from North Algona-Wilberforce. Some background.
Perfect. Thank you, Chair. So the background for Policy A20, Use of County Vehicles. The cab building has recently, in an effort to reduce mileage claims, introduced the trial of a rental car on site that can be loaned out to the members at the cab, as opposed to using their personal vehicles and submitting mileage claims. With that coming around, we thought we should put a policy in place so that folks at the cab who typically don't necessarily drive a county vehicle are sort of aware of our expectations and the regulations and what to do in the unfortunate event of an accident, etc. There are SOPs within other departments, but this is sort of an overarching guidance document about use of county vehicles. Policy A21, we've recently received some reference requests that are online using forms and asking detailed questions, things that we probably using HR guidance wouldn't answer necessarily. So we thought it best to create a standard policy so that everyone that currently works here, and if they were to leave, they'd know what information we would release as a reference, and also provide that guidance to all of our staff so that it's clear. Policy A22, we've recently had a number of college-placed co-op students. We're trying to also get right into the high schools, and we had the opportunity to meet with some folks from Fellows High School, within the last 2 weeks and told them we were working on this new policy, and they're excited. They provided us contacts at the board as well as at the Catholic School Board to try and encourage the use of high school co-op students across the county. So this policy will help guide bringing that program to fruition to, hopefully again develop future long-term employees. Policy E06, pregnancy leave and parental leave, has been updated to match language in the Employment Standards Act, as well as to modify the sub-plan, which is the supplemental unemployment insurance that our folks get topped up when they're on parental or pregnancy leave. With the change a number of years ago from the standard 12-month to an 18-month leave, our math didn't change. So you could have been topped up for 18 months for the 93% versus the 12. What we've implemented, the change in language here, is consistent with what we've recently bargained in our long-term care, paramedics, and other agreements, is essentially to say the same dollar value of money will be available to you, but it'll be reduced and spread over a longer period of time, the payment. So in total, it's the same because it wasn't meant to financially benefit someone to take a longer period of time off. So we're just keeping the same pot the same, but split over a longer period of time. So again, so that no one has a more benefit by taking the longer period off. And policy E11, flexible work arrangements. So we trialed this for the last year. It stemmed forward from our last employee engagement survey as an area that folks wanted to work on work-life balance. We've taken some lessons learned in the flexible work arrangements, sort of operationalizing it. So we've modified the policy, but we've also put a lot of additional Q&A into our handbook that accompanies the policy so that managers and staff are aware of how things are treated. And so what we're looking forward here today is to make it a permanent policy, obviously subject to cancellation in the future should it not fit the corporation's needs at the time, but essentially to remove the trial period of the policy. Each arrangement still maintains a trial period of 90 days within them to make sure that it's suiting the operational needs, and then the manager can evaluate whether to carry on from there. So that's sort of the background. If anyone has any questions, happy to answer them.
Thank you. Any questions, comments, concerns? Member from Edmundston Bromley, please.
Thank you, Madam Chair. Just the only question I had was on item A. I'm assuming that this is trialing. It is quite clear in the background, but there must be some indication that the cost curve now, particularly I think 70 cents is the CRA mileage rate. It seems high, though it may diminish, but is that correct? Are we seeing or anticipating that the cost curves are going to be different through rental rather than use of own vehicles?
Through Madam Chair, that is our intention. The other thing we were trying to achieve was to have some type of an environmental impact as well. So we had considered electric vehicles and somewhat discarded that and settled on a hybrid vehicle. But we were also trying to try and improve our greenhouse emissions as well by having a hybrid or a fuel-efficient vehicle in use by staff as opposed to their personal ones.
Supplementary.
So ultimately then, this will be a capital acquisition, and then it will be leased out as an internal business, is correct?
Yeah, through you, Madam Chair. What we were attempting to do was time this for a 6-month trial and then have a business case into the 2025 budget. So I think we've only had it for about a month now. Haven't reviewed any of the data yet, but it seems relatively popular. But other than that, we'll have it wind it up and have the numbers for the 2025 budget.
I was going to say, I thought it was a bit early if we don't have data. Go ahead, Craig.
Yeah, no, thanks, Jen. Through you, it's one of these initiatives because many of us travel a lot, and if you take all of us traveling a lot and break it down into 5 days a week, that car is being used quite often, regularly out of this building to do these. Planners use it to go to wherever north they're going to Wilberforce or whip off to Arnprior for the day, and it is on the face of it saving dollars, maybe saving the planet a bit, because the hybrid is really working nicely for those that have used it. And I've yet to jump into it yet because it's always out of the parking lot. But the lease options through the company that we've employed are very attractive, and I would suppose that will make up rather than a capital purchase, will continue as an operational expense moving forward. If we continue to lease these items, then they become somebody else's issue in terms of warranty and otherwise. So again, Daniel's quite right. It'll come forward as a business case after we assess it in the fullness of time.
Yeah, go ahead.
There will be lots of times to analyze, but if, as you are suggesting, that it is often out of the parking lot, and given the geography of the county of Renfrew, as Councillor Service said, all the way to Arnprior, then the only caution that I would anticipate is what our mileage may be on a lease. If typically if we're seeing this being utilized frequently, that could be a concern.
Yes, because it used to be, when I was in the car industry, it used to be 25,000 kilometers per year. As a lease.
As a lease, but
Yeah.
this is being leased through a rental company, right?
Oh, so it's a lease on a lease.
It's an agreement.
Okay.
It's an agreement with a rental company.
Okay. Anything further? Member from North Algona Wilberforce, please.
Thank you, Madam Chair. And through you, in regards to the flexible work arrangements, glad to see that it is becoming permanent. And I am curious, though, for those employees that don't have the ability because of their work schedules, challenges, et cetera, to utilize a flexible work arrangement, is there any negative feedback from those individuals?
Thank you, Chair. Through you to Councillor Brose. We actually recently just conducted our second employee engagement survey and are in the process of consolidating that feedback now. I believe, probably at a high level, yes, there are some folks that feel that if their position isn't able to support a flexible work arrangement. However, some of our folks have flexible scheduling in the sense of shift exchanges and shift swaps and things like that that do allow them some level of flexibility. They just may not see it in the same sense as maybe working a compressed work week and would see that as being unfair to them, but they do have some flexibility in their scheduling as well.
Thank you for that.
Yes, because it's not going to work across the corporation. Anything further? Then I will call for the vote. All in favor? Thank you. And now I can call for an adoption of the human resources. I'm figuring this software out. Can I have a mover and seconder, please? Moved by the member from Deep River, seconded by the warden. All in favor? Excellent. Is there any new business? I see none. Then, pursuant to Section 239(2)(d) of the Municipal Act, as amended, to discuss labor relations or employee negotiations for paramedics and personnel matters about an identifiable individual, I would ask for a mover and seconder to move us into closed. Member from Amherst Bromley, seconded by the member from North Algona Wilberforce. All in favor? Excellent. Thank you. Welcome back, everyone. All right, the date of our next meeting is Thursday, August 15th. So everybody have well, I guess we have county council, but then a lovely July break. And I'll ask for mover and seconder for adjournment, please. Moved by the member from Atmos Bromley, seconded by the member from North Algona Wilberforce. All in favor? And we are adjourned. Thank you.